Good morning, everybody. This is David Blair, the Crosshairs Trader. Glad to have you with me. Let's quickly take a look at the market. What's going on? We've been talking the last couple of weeks. The market's been consolidating, trying to rest a little bit, and that we really needed some pullback and some more rest before we felt very confident about entering any new long positions. And we're going to take a look at some of those that we've traded recently and how extended I believe that they are. And so I really am seeing that the market needs to take a rest. Trade setups need to pull back and take a rest before they give us a good strong signal to get in, as we're going to see. But let's take a look at the futures. Here is the S&P futures. Now take a look. We've been watching this area of resistance that goes back to May. And we're right there back at it. This is one of the reasons I've been cautious about entering any new trades right now, is because we've had this nice big move up, which of course is history. But here the last few days, we've been struggling right around in here. And so I really wanted to see some type of consolidation continue in here, get some strength up to bust out of this resistance and then go higher. So for me, best case scenario is for the market to sell off for a few days or go sideways some more to get up some strength. We look at the NASDAQ futures, same thing. We've got some major resistance. I mean, we still got some points to go. We're at 2015, whatever you want to call it. We've got some major resistance, which is our highs from back in April at 2048, but we're struggling a little bit right here. Again, would love to see this go sideways some and then bust higher. But again, the market's going to do what it wants to do. It could tank all the way back down here to our breakout level again. But we have had a strong move, and we really need this rest. Really do. Take a look at the Dow, an area of resistance that we've been watching as well. It's tried to break above it. However, the problem is we've had such a big move up to this line here. This is our major moving average from the weekly chart that I have superimposed upon my daily chart. But we've had such a big move here without a lot of rest. We really need some rest before we can shoot for that high of the year again. And let's look at one other thing, OEX. OEX is broken higher. This is the S&P 100 from our major moving average here. We do have some resistance, but it's a little ways away. But again, needs to be consolidating a little bit, pull back for that next run up to here, and then possibly to the high of the year at around 553 or so. And that again is our major moving average from the weekly. Will be up here. So still got some areas to be concerned about. Now let's take a look at some of the trades that we have had in the last couple of weeks or so that I felt like it was time to pull the plug on them. And you can see that FXI, which is a China ETF, has had a huge move. What I believe might be an exhaustion gap here, which simply means we've had a strong move, and then one more set of buyers comes in and pushes it up. But this, to me, folks, is not the kind of breakout that you trade to go up, because we've already had the big move. In order for this to be a good breakout to trade to go up, I want this thing to rest and pull back some, get up to strength to bust through it. It is trying to bust through it now after it's run a marathon. And I just do not like trading a stock when the breakout is happening after a very long move. Let it rest first. AEM, some gold stocks that we traded. Again, we got in on this breakout, but look at how much it's been moving. We did have a warning signal back here a few days ago when it dropped almost over $2. It's telling us that it needs to rest. And some sellers are coming in telling us it needs to rest. It actually needs to pull back down somewhere in here and then give us another opportunity. If this is going to be a trending market, then we need these stocks to pull back to give us another high probability trade opportunity. Look at IBM, folks. IBM can go to 150 straight up from here, but for me the risk is just not, it's just not worth it. We were watching it break out here, which it did forcefully, and it's moved up almost 8 points, 9 points since that move. It's time to rest IBM before I feel comfortable continuing to trade that. A nice trending stock takes breaks. This one has not had a break. We need a break before it continues to go up. So IBM is one. WLL is another that broke out. Oil stock that really, again, after breaking out what we were looking for, it needs to rest in order to enter it again. And BEXP, last one, again, it zooms and zooms higher, but for me, this needs to rest right in here, and if it can stay above that breakout level, even fall back a little bit below it, that would be wonderful. We could watch this stock, let it set up the trend, an up move, a pullback, and then an up move. But to go straight up without rest is very disconcerting, and I'm not interested in trading that again until after it rests a little bit. Yesterday I talked a little bit about the rail stocks. Another reason, and I even had a post yesterday about the rail stocks, and I believe it was had some technical difficulties for you understanding it, so I'll talk about them a little bit here. One of the reasons I'm not 100% convinced to get into rails or either just to open up a small position is because of some resistances and, again, the general market needing to rest. The rails are going to only move as long as the general market is moving in a good direction. So Norfolk Southern, resistance, general market. CSX, breaking out. However, they've got earnings this evening, so not touching that one until after earnings. Take a look at it. KSU, still got some resistance, and again, we need that general market to help pull this up. And earnings for these other stocks besides CSX are a couple weeks off, so they could provide us some good plays if the market likes what CSX says today and the market continues to rise. UNP has already broken out. This is a area of resistance from the weekly chart, so by the end of the week we'll know whether this is going to stay above this line here. But in order for me to feel more confident with UNP, it does need to relax a little bit, let the general market tell us that we're going to scoot higher, and then we could trade UNP again. One other one that I mentioned yesterday, IYT, which is transports. All of these stocks, Norfolk Southern, CSX, KSU, UNP, are all components within the IYT. In fact, there is significant exposure to the railroads in the IYT, the transports iShares ETF. CSX is number 6, Norfolk Southern is number 5, number 10 is KSU, and UNP is number 2 in their top 10 holdings. But notice what's going on here. We're also reaching an area of possible resistance. So with all those things combined, I would suggest you step aside and wait, or if you're going to trade the rails, to trade very lightly. Okay, what we're looking at is what's going to happen with the futures and the general market. Are we going to rest? Is it time to step aside and wait for the next opportunities? We Crosshairs traders have opportunities both on the upside, and we have a few on the downside if the market decides to head back down to that range that it was in for a couple of months. Hey, join me anytime you like. My blog. You can sign up, subscribe via RSS feed, email, and now Twitter. Many exciting things are going on here, and I have many services available. Please contact me at david@crosshairs.com if you've got any questions, any feedback, and want to inquire about the special services that I offer. Hey, y'all have a wonderful day. Make it a wonderful day both in and outside the charts. Thank you.